Okay.
There we go. And we're recording. We're going live. So we've got a slug of people here and looking forward to having even more join us. Thank you for those of you who are here on time. We very much appreciate it. My name is Brian Tormey. I'm the president of Titlevest and very excited to have you all here. We're going to give another probably 1 minute for people to get logged in because it's only 12:02 now, and then we'll get going. And stay tuned for invites to Space VIP events coming to you someday soon.
Live.
Not from space though.
Maybe we should do these webinars from space.
Oh,
You know, Gary, if you're game to front me the ticket price, I will absolutely go into space.
I got you covered, Brian.
You got me? Okay. I could tell you were sitting a little crooked. Your wallet was getting a little too.
hey, Gary, we'd have to figure out the air rights. we could figure out something in real estate.
Well, so this isn't quite real estate, Rob, but there's something to be said for they're now figuring out the regulations around sales tax as it applies to something that is above, right? And like, I don't know, do you owe sales tax on that? Where do you report your, I mean, the income tax piece is a little bit more clear. You should see the Tom Hanks section of the Jimmy Kimmel thing. Okay, we'll have to go check that out.
Okay.
Okay, well, we've given it 1 more minute. I think it's time to get started. So thank you everyone for being here. We're very excited to have you all here for another series, part of our Be Your Best series. I'm going to turn over to Richard, CEO of HGAR and president of One Key MLS, to get us started and rolling with some introductions.
Thanks, Brian. And this is actually still a first. We are doing this from the East Coast and the West Coast. Both Gary and I are on the West Coast in San Diego, and there are about more than 10,000 realtors at a conference here. So this is the first big conference that I've attended since COVID. And it really does continue to feel like life is getting back to normal. Both Gary and I were at the Delta terminal at JFK 2 days ago, and it was packed. Everybody was masked up and everybody was masked up on the planes. But it really does seem like, more and more we're getting back to normal, which is a good thing. Brian, as you indicated, I'm the CEO of the Hudson Gateway Association of Realtors. We're a not-for-profit trade association representing more than 13,000 real estate professionals in Manhattan, the Bronx, Westchester, Putnam, Rockland, and Orange counties. I'm also president and chief strategic growth officer of One Key MLS, the comprehensive multiple listing service for the New York region. One Key has more than 44,000 subscribers and serves the region from Montauk to Manhattan to Monticello. Today, we're talking about townhouses and the renewed rise and appeal as buyers seek more square footage in converted outdoor space. We'll share the ins and outs of these transactions and what you need to know to close the deal. We're again pleased to partner with Titlevest and have President Brian Tormey moderate our discussion. Titlevest is the leading New York City-based title insurance agency and member of the First American Families of Companies, offering a full range of services for real estate property purchase and refinance transactions. Titlevest has offices in Manhattan and Westchester and engages in transactions upstate, downstate, and nationwide. Titlevest has won the New York Law Journal's Best Title Agency Award every year since 2013. And that streak continues, doesn't it, Brian?
It does.
Now let's meet our panel of experts. We're pleased to have with us Marissa Tracy, Director and Global Private Banker at Citi Private Bank. Also joining us is Jed Garfield, Managing Partner of Leslie J. Garfield and Company. And we have Robert Frankel, partner of the New York law firm Cohen and Frankel. Marissa, Jed, Bob, thank you so much for joining us. And now I'm going to throw it back to Brian.
Okay, well, thank you, sir. We are excited to get going. I'm going to cover a little bit of ground rules and housekeeping for everyone. And so excited to dive into our stuff. Very quickly, for all of those in attendance, if this is your first time, please keep the questions coming. We ask that you use the Q&A function in Zoom to submit your questions. For most of you, that'll be down at the bottom of your screen as a little Q&A with 2 chat bubbles over it option. You click, put in your name, submit the question, and we'll sort of weave it into the dialogue. I'll re-announce your question and we'll address it with the panelists. You can, of course, use the chat, but it's much easier to queue them up in the Q&A function for us. We do encourage commentary in the chat and shout outs, accolades, approvals, or contrary thoughts. You're welcome to put them there. We otherwise will have everyone muted during the session just to help keep it clean and easy to hear. So please do keep your phone on mute during the call. With that, Richard, let's turn back over to some updated market stats and numbers. I'm excited to hear how we're doing as we enter the new quarter.
Yeah, it's interesting. And I thought this would have happened earlier, but I'm not surprised. We are seeing a bit of a softening of the market compared to last year. Westchester's down just a little bit over 15%. Orange County, 14%, Rockland County, 12%. Interesting, as you get closer to the city, that changes. Bronx is up 51%. Brooklyn and New York City are both up. You get back to Long Island, and you've got Nassau County down 18% compared to last year. And this is month, so October versus October of last year. And Suffolk down about 21%. I don't see any of this reason for panicking, quite frankly. Quite frankly, I think it's three factors that are very specific to the suburbs versus the city. First, we continue to struggle with inventory issues, and that is not the case in the city for the most part. We also, after COVID, lost the seasonality of the market. The market just kept on roaring into the fall and winter months last year, which typically doesn't happen. So I think we're seeing a return of seasonality. And quite frankly, thinking back to Alan Greenspan and those immortal words when he said, over exuberance in the markets was his biggest fear. I'm actually kind of happy to see these numbers calming down, because we still see, especially in Westchester, and I think also to a degree in some of the Long Island markets, bidding wars that just don't make any sense. And you'll have a property come on the market and it'll sell within 24 hours, $500,000 over asking. And I think that type of activity just is not sustainable in the long term. So I think actually these numbers reflect a return to a normal market per se. And I think this is going to be indicative for the last quarter of this year, but I think we're still going to end the year very strong. And I think we're still going to start next year in a very strong position.
Yeah. Very quickly as a follow-up, Richard, James Hall asks, he says, I presume you're talking about transaction volume and not pricing?
Correct. Pricing is still up.
Yeah.
Now it's slowing down, but I'm referring specifically to transactions.
Got it.
And across all property types, single family, condo, co-op, and multifamily.
Yep. Yeah, I mean, I think you're right. We were chatting just the other night about the pace has been hard to keep up with. Like, I think many of us can enjoy a little bit of a breather that this represents, but I can imagine, especially with the foreign nationals coming back with travel restrictions lifting, I can imagine that we'll be seeing some, a pretty busy new year as we get into it. I'm curious, before we really get into the townhouse things, Marissa, Jed, Rob, predictions on next year, sort of on the heels of Richard's commentary on the stats. Do you feel like this slowing down is going to deepen into the new year, or level out in the new year, or pick back up into the new year? Marissa, we'll start with you.
Sure. So actually what we're seeing is we saw a little bit of a slowdown this summer, and it's already started to pick back up again. I have clients that are actually already starting to come in from overseas. I have a client who just signed 3 contracts last week for purchases. So we're seeing things start to build back up again and get busy again. We're also seeing clients who are in the city or coming back to the city and are looking to upgrade, right? So they feel that the market is now strengthened, they have further renewed confidence in the city, and they're coming in and they're buying bigger.
Yeah, and maybe on the heels of our mayoral change and all those other things. Yeah, I hear you there.
All those other things. I think that there's a new sentiment that people are happy to be back in New York and are willing to look to be here and to continue to buy and buy larger.
Yeah.
And Brian,
Jed,
if I could
go for it,
piggyback
Richard.
on that with Jed, I still sense that in New York, there's a sense that there are deals to be had, which is not the case in the suburbs. I think folks are saying the suburbs are priced out and they're seeing more opportunities in Manhattan and Brooklyn. Would that be a fair assessment, Jed?
Well, Richard, I actually thought your initial observation is something that I've seen, which is there were a lot of people during the pandemic, both driven from a tax perspective. There was a fear of the raising of the capital gains taxes. You did see a lot of very wealthy people leaving New York City. I think right now I'm representing 3 people, two of whom have moved to Florida, one of whom moved to Puerto Rico. But I think what's also interesting is in the last month or so, I've actually had 2 of the 3 people who left New York call me and say to me, listen, we're actually coming back to New York because you really can't put a price on the New York City experience. And I'm not one of these rah, New York's the greatest place in the world. I mean, listen, it's wonderful. It's an extraordinary place, but there's certainly other places to live. But I think that on a full-time basis, if you're bringing up a family, bringing up your kids in Coral Gables versus bringing them up on the Upper East Side, I think there's a sense of, gee, maybe the Upper East Side really is a good place to be. In terms of opportunity, I think that there was opportunity. I actually think that there is becoming less and less of it. We are absolutely seeing supply going down. Well-renovated, newly renovated property is moving at a pretty brisk pace, and I'm talking about in the $10 million and up range. And I always find I'm always a little shocked by how much money there is out there, but it certainly seems as though people are buying, and the opportunities that had been in the market are becoming rarer. So that I think that answers what you were talking about, Richard.
Rob, how about you? Thoughts on the new year?
2 comments. On the high end, there were many more deals and discounts over the past year than any other price point. So I would say high end to be defined as north of 5 million even. And as you go higher, the discounts were bigger. They are subsiding, but they are still there versus pre-pandemic pricing. New construction, luxury condominiums and new construction absolutely came to a standstill during the pandemic.
Mm-hmm.
And with the vaccines in January, they slowly picked up having some contracts the first 6 months of the year, but at large discounts. Those discounts are slowly getting smaller and reducing. I don't know if they're all gone yet. I don't think so.
Mm-hmm.
So I still think if you're looking to buy, a $20 million property, it's still a good deal, whether it be a condo or a townhouse. I'm 61 and I've been through a few of our New York City traumas or global traumas. I've been through 9/11. I've been through the financial crisis of 2008. Then after both and the hurricane. And after all 3 traumas, New York basically comes to a standstill with transactions for some period of time, depending on the severity of the trauma. And then when we're all relaxed some, the market, the floodgates open, and the one that does the most volume out of all of these New York, state areas, New York City is just it's a hurricane of business is what I call it. And since January, it has been a hurricane of business. I don't know, and I would like to hear from further economic experts, whether or not New York City has the legs to continue a hurricane of business next year. I'm afraid that we've caught up, and the people that had to sell and moved. The people that were moving here moved here. and next year is going to kind of resort to a more normal year, maybe a little bit better than normal, but I don't think the hurricane of business of this year will continue to next year.
Okay, some good perspectives coming in all around the horn. Well, thank you all. Let's turn, because we've promised all the people attending today some access to expertise as it relates to the unique and beautiful unicorn that is the New York City townhouse transaction, which has got a lot of attributes to it that make for a very different kind of transaction than so many other types. So let's start with, Rob, I'm actually going to go back to you and start with you and touch on just a couple of the high level, what are some of the key differences in a townhouse transaction for our agents here relative to, your typical New York City co-op and condo deal?
Yep. So a townhouse is a self-contained unit that houses all of the building systems, unlike an apartment, where when we buy and sell apartments, the air conditioning system or the heating system or the hot water system is typically a building function, and from the basement or wherever the mechanicals may be. In a townhouse, they're in the townhouse. So buyers of townhouses are like buyers of houses in the suburbs. We do physical inspections on townhouses as a must. On apartments, it's rare that we do an inspection. We do some, but not all that many. I would say maybe 1 out of 100 deals that I do does an apartment inspection. Also, townhouses own the land that's underneath them, and they own a backyard, and there's usually fences. So we have surveys where we don't have surveys in apartments. And the last piece that's significantly different than apartments is how a relationship between the townhouse and the city of New York. Apartments have apartment buildings, condos and co-ops have that relationship. But generally speaking, the building takes care of violations and certificate of occupancy issues, where a townhouse owner takes care of those issues personally. And when there is an owner of a townhouse, or when I have a seller or a buyer, much of what we speak about is the relationship with all the various city departments. Department of Buildings, which legalizes the space of the townhouse. Department of Finance, which taxes the townhouse. And then there's HPD, and there's other departments about that supervise the apartments in the townhouse. And there's probably 5 departments, landmarks, that townhouse owners have to deal with, and deal with them as they must. So it's a little bit more, there's more responsibility and obligations of a townhouse owner than an apartment owner. There's much more due diligence in transactions prior to signing contracts. And that's a basic overview of the differences between the townhouse deal and an apartment deal.
Yeah.
What's nice is these townhouses in Manhattan have been here for so long that you don't argue about land all that much, like in the suburbs, where with fences. The fences have been there, and party walls where buildings are built next to each other. And there's also what I most enjoy about these townhouses, and Jed could speak more to it, is the history and what families lived in there and how they changed over the years. And there's a lot more storytelling and history about these townhouses that make these transactions a little bit more unique and more fun for the participants as well as the owners and buyers.
No, absolutely. Marissa, I'm actually going to come to you next on this, because the maybe for our agents in attendance here, speak to a little bit of some of the lending and underwriting differences that, City Private is looking at when looking at a townhouse transaction versus your typical condo or co-op transaction.
I think the thing that people need to think about now in doing a townhouse transaction is that the banks are very busy and it takes much longer to do an underwriting or to put a mortgage in place than it did before the pandemic. So in order to be able to move quickly and have a client be able to make an offer, you really want to look to have your client do a pre-approval for the mortgage. Now there's a difference between a pre-qualification letter and a pre-approval. So a pre-qualification letter just basically means that someone's looked at your credit score and the bank says, yes, you should be able to qualify for a loan. A pre-approval letter is actually a full underwriting on the mortgage, where the client has basically applied for a mortgage, we've done a full underwriting, and the bank has issued a commitment letter X the address. So your client, if they have at Citi what's called a Sure Start pre-approval, can actually have in their hands a letter that basically says for 90 days, they are fully approved to borrow up to X amount of money. And in working with a private bank versus working with a retail bank, those loan numbers aren't limited. So you could be pre-approved for a mortgage of 10, 15, 20, $25 million, and that enables you to walk in and bid without a financing contingency. And I think in a market like this, where townhouses are limited and demand is high, that takes a lot of the stress off of the buyer. It also helps move the process forward to closing much more quickly because you've done all of that process in advance. So that's really one of the biggest differences that we're seeing for clients in the high end of the market and in the townhouse market, which is almost exclusively high end.
Yeah. So really, not all pre-qualification letters are equal. Like
Not
they're
all
not.
A pre-qualification letter is not a pre-approval letter, and they are very, very different.
Yeah, and knowing those differences. Now, Rob, you had some interesting commentary, and then Jed, I'm going to come back to you because you're our townhouse master, so we're coming to you real soon. But Rob, you had some interesting points on the benefits of, again, we're talking typically New York townhouses, we're talking about the higher end of a price point, and your comments around the reasons why, as the practitioner, the value of there being a private bank, the sort of City Private or other, side of things being so much more valuable.
So financing in townhouses is much different than financing in an apartment. And townhouses are a more complicated piece of real estate. As I talked to you about various city agencies, there are warts or pimples on these buildings. And so there's violations. There are things like non-conforming certificates of occupancy, which for all the brokers out there, you could have a physical 4-family house, but the certificate of occupancy says it's a 2-family or a 3-family or a 6-family. And there's no permit on record that's changing the family count of that house. And so we call that a non-conforming house. That's a tough loan to get because you don't have legal collateral. So the only way to get a loan on a house like that would be through a private bank with a person that has a lot of money and that could possibly offer the bank a little bit more protection from their assets. Marissa can talk more about it, but there are banks that do a better job, that see more that see more New York City townhouses. You don't get that non-conforming use much in the suburbs, other than all the brokers out in the counties. You'll get a basement that wasn't permitted and finished, or put a bathroom in somewhere. Sometimes you'll get in the Hamptons, you get a lot of people putting in extra bedrooms and do not revise the C of O. And in the Hamptons, when you sell, you must get, in many of their towns, a new C of O for a transfer. So the town comes in and inspects, and it's a problem. And you now have to go permit it and legalize that extra bedroom or two. So there's more complexities in a townhouse. Banks like to fund in a clean transaction, legal collateral. So in a building, for instance, when they're doing an apartment, they just want to see, that there's a C of O on a building. If there are violations, the building gives a bank what's called an indemnification letter, that the building will not look to the bank to pay any of those fines or fix any of those violations. So banks are covered in apartment transactions. They're clean. They don't have any obligations or liabilities. If they're loaning into a building that has issues, many a times they ask the owner to put up escrow to clean up the bank, an indemnification letter to clean up what's going on in the building. So loans in townhouses, unfortunately, as Jed knows, you do a lot of that work because a lot of these deals are not contingent on financing. So you can't move into a contract, sign it, and wait to get the financing and find out that the building is dirty, or not dirty, but has issues, and then not get funding. So good lawyering on townhouses and good brokering on townhouses, you get the full picture of a townhouse by ordering a title report through a company like TitleVest early and having it pre-contract. And so all the information is available, and we can decide pre-contract if that building is going to be loanable or financeable.
Yeah. There's a good question that's come on and from Valen, and it was directed at Marissa, but I'm going to direct it half to Jed and half to Marissa, and let Jed go first, because I think this is something he's dealing with as on the selling side. And the question is, can the listing or selling agent legally reject the buyer's offer because they have a pre-qual letter instead of a pre-approval letter? Can that be used as a consideration of whether or not to accept or reject the offer? So I'm going to start with Jed.
Yeah, I mean, I think I will address that question, but I think that, Rob and Marissa, and you too, Brian, I think that when buying real estate, it's important to go into these transactions armed with whatever you really need to actually make a transaction happen.
Mm-hmm.
It is an active market. I think Marissa makes a super good point, which is if your customer, in fact, needs financing or is planning on financing, whether they need it or not, they should absolutely get that squared away in advance. Like there's no question, because for me as a broker, I'm typically on the sell side of a transaction, and my job, in addition to getting the highest price, is also having a qualified customer. And very often what I will say to a broker in advance of them making an offer is, look, I just want you to be aware from our perspective, i.e. the sell side, we are looking to you to do an all cash deal. So you can show up at the closing with Marissa or not. But if you are going to be showing up at the closing with Marissa, you need to know in advance that Marissa and her team have pre-qualified you and pre-approved you to move ahead with the transaction, because that's the type of thing that can absolutely blow up a deal. And I think it's super important. And it's not that complicated. I mean, I'm not looking to dump extra work on Marissa's desk, but I mean, it's part of what she does, is this very literal, vetting of your customer. And, it's also sort of nice because it removes the vetting process from you. Instead of you're saying, really, do you really have 10 million bucks? Dump it on Marissa. Make it her problem. Make her the bad
He's good
guy.
at it.
No, because it's, first off, she's got a lot more experience with, people than I do, certainly as it relates to looking at their balance sheets and their assets and liabilities.
Mm-hmm.
And I think by extension, that also sort of is one of the reasons why I happen to be a huge fan of Rob Frankel's, because as a real estate broker, you want as frictionless a transaction as you can have. And when you hire someone like Rob and you have that conversation in advance, he really does smooth out the headaches because he knows what he's doing. He's used to dealing with non-conforming certificates of occupancy. And I'll often call him and say, yeah, Rob, what are we supposed to do? You know, these guys are going to city for a mortgage and there's no certificate of occupancy. Like, what do we do? And Rob figures it out. I will say also to any brokers who are listening or any salespeople that are listening, don't be a hero. Go to the people who know what they're doing. It makes everybody's life easier. Don't say, oh, no problem with the financing. It could be a problem. Don't say, oh, no problem with the certificate of occupancy. It could be a problem. And certainly title, the longer I do this, the more you realize how vital title is. If someone's buying something on a purely all cash basis, it doesn't really matter. They're writing a check. I mean, it matters to them, but from a transaction perspective, it doesn't really matter. But if people are putting any kind of financing onto a transaction, you've got to talk to Brian in advance to make sure that there are no major problems. The city, we were talking about owning a house versus owning an apartment. There's a lot of little stuff that one needs to deal with owning a house. Sidewalk violations. Every single deal that Rob's done for us in the last 20 years, there's been a sidewalk violation. Yeah. By the way, brought to our attention by Brian. Marissa's like, yeah, well, Citibank's not closing until you guys deal with this. And Rob, gets it squared away, or he says, call this expediter and get it squared away. Right. There are sanitation violations. The prior owner left their garbage out. It's a little thing, but it's absolutely the townhouse owner's responsibility to deal with it. So anyway, blah, blah, blah. But that's just some thoughts about what these guys were all saying.
Yeah, I think.
Wait, I want one important takeaway that Jed highlighted. He brought out, but I want to highlight it for everybody. When I have a townhouse with a buyer that says to me, I need a loan, the whole transaction changes for me. I now have to protect that buyer to buy that townhouse with all these pimples and warts. Pimples and warts, I mean things wrong in the townhouse, and make sure a bank's going to loan. Most likely, I will not have a mortgage contingency. I am the gatekeeper to a deposit. Who's protecting the buyer's deposit? The buyer's lawyer. So when I have a bank on a townhouse deal, I help that buyer with the bank, and we go to Marissa. I have a tough talk with Marissa. I even send the title report to Marissa. I make Marissa hire a lawyer before we're in contract, and I say, who you're going to be hiring on this deal? And they tell me who the lawyer is, and I send the title report to the lawyer. I let the lawyer that's going to hopefully make a fee from Citibank at some point in the future, review title, talk to Marissa, and then come back to me and say what we can do to fund that loan. And then I have control in the contract. This is what Citibank needs. This is what I have to get the seller to clean up. So the whole transaction is the flow chart, or the basis of the steps that I take to negotiate, change when I have a loan. And the lender makes me actually change more. And Jed knows this. And sometimes we have surprises. And Jed has brought up, smaller violations like sidewalk and garbage. And sometimes there's, a signed off permit not a signed off permit for work that was done on a kitchen or electrical. The more
Mechanics
significant
lanes, don't forget
mechanics liens, we generally, that the seller must take care of. But the heavier the permit, the more the bank's dander goes up, the more friction will come back to the buyer to make the seller clean up for funding. Marissa, you could talk a little bit more about this, but good lawyers do that.
Yeah, I was going to say, I think one of the points that Jed and Rob are bringing up is not only, you know, in New York purchases in general, but especially in townhouses, you need a team of experts that you know and you can reach and that can work together. So one of the things that happens, just like Rob and Jed work together all the time, if you're doing a mortgage with a retail bank and you go into a system and these things come up, your client doesn't necessarily know who they're calling. Whereas if you're working with a private bank, you have a private banker and their team. And so Rob calls me, we pull the bank attorney in, we pull my mortgage underwriters in, we're able to work through any problems that come up, and having the access to a dedicated team of experts and to a team that's used to working in a, you know, in a large money space on mortgages with big numbers and complications is what you need when you're addressing a townhouse market, even more so than when you're doing just a normal apartment purchase or transaction.
Absolutely, and absolutely.
Yeah. I'm going to go to our Q&A. We've got two questions that have come in. The first one I'm going to go to you, Rob, with, and then the second is on financing for you, Marissa. The first is a question about the title search. Their situation, given that there were multiple owners holding the title and some have deceased, is it advisable for the remaining sellers to order a title search prior to placing it on the market?
So generally speaking, yes, it gives you great information. Brian, why don't you tell us about how much a title report costs?
Sure. I mean, typically, you know, New York City, it's in the $300 to $700 range, sort of depending on some of the nuances.
I usually tell clients around $500.
Yep.
If a seller is a little nervous and they're not meticulous about the management of that townhouse and their ownership, they normally first go to the broker for a much, pre-offer accepted, I'm not that involved.
Mm-hmm.
Then they normally are speaking to the broker. And I think once in a while a seller does have a title report. Typically, if they have a big law firms don't like any risk and they want all the information and they don't really care how much it costs. So they're all for obtaining information.
Mm-hmm.
I look at the fact pattern if a seller calls me and said, it's worth the $500 to know if we're going to have any cleanup issues. And then if we have cleanup issues, depending on the severity of them, you know, if it's a DOB cleanup issue, it could take 6 months to clean up, depending on whether or not you could feel whether or not the building is financeable if you don't clean it up, or you may have to clean it up in order to get a loan. So you're happy to have run that title report and gained that information and ask that seller to fix it up. So yes, it is an advantage. Anytime you can get more information, it's an advantage. And there's a cost analysis about it.
Mm-hmm.
$500, I think, is well worth the decision to order the title, seller or buyer, early.
Yeah. Marissa, next coming to you. Can you get a loan on a townhouse which needs significant work, principally a gut renovation?
So most of the major banks don't do construction financing anymore. As long as the house is not in construction at the time that you're doing the mortgage, you can put the mortgage in place and then do construction after the fact, assuming you're not tearing the thing down, right? You can do renovations within it. But construction financing is really something that most banks aren't doing anymore, and you'll need to probably go to a smaller local
Mhm.
bank to get
Yeah.
construction financing on a townhouse.
And I'm going to tag into part of what you said from the title perspective. We've definitely had seen transactions where people were like, well, I just got started on I'm not using the money for this, but I just hired this contractor and did this and just started a little bit of this stuff. And Jed, this goes to something you said. Hiring a contractor and starting work can prime what are called mechanics liens, the potential for mechanics liens, should that contractor not get paid. And under lien law, that lien could beat out and prime the mortgage itself. And so be very mindful of your clients considering construction and hiring and getting stuff going without thinking through the implications of that on a lender for the buyer, and the title side of things as well, and the implications of having started construction. You sort of need to, by the time you're closing that transaction, have also finished that construction and have lien waivers from those contractors. Okay, Lydia, I'm gonna come to your question in a second, but before we do, I want to come, actually, I guess this sticks pretty close with what we're talking about, so we'll do Lydia's question next. So Lydia asks, can a seller require that a buyer use their own title agent? How long on average does it take to get a thorough title report? And lastly, what in your experience are insurmountable obstacles that have come up in title reports preventing a sale? So I'll answer a little bit of that, and then I'll open it up for anyone who'd like to chime in on that. A few things I can say, Jed's partner, Rick, actually called me Tuesday afternoon, and we spoke at maybe 5:30 or 6 p.m. He was seller side on a transaction. There was some mishigas happening on sort of the buy side of the transaction with the parties. And Rick said, Brian, can we pull you in from the sell side to run title and help us secure and just know that we've got clean title and we're not going to have conflicts, and like we've got someone we can trust on this transaction, so we can move forward with our contract signing and know that we're going to have a safe, clean, and smooth closing transaction. So that was Tuesday night at about 6 p.m. Now I can't always do this. Jed's partner, Rick, is a good friend. And so we got him the title report by about 10:30 a.m. the next morning on this townhouse. That's not always doable, but sometimes it is. So the answer is yes, you can absolutely do them in pretty short order. Typical turn time is, 2 to 4 business days. 1 day is sort of like a normal rush. You really need it. There's a situation. So that's, at least for Title Vest I can speak to, that's our normal turn times on those. We have done a lot of the townhouse market. And so we have often already been on a building, and that's very useful because then we're sort of pulling that forward and it's a much faster. And sometimes those are only hours to really update and turn out. So that's one of the questions on the average turn time.
So Brian, you're basically called in to clean up Mishigosh. Is that what you're saying?
On more occasions than I sometimes want. Yes, our friend, we have a different friend that we call the fixer, and he's more a fixer in the legal sense. I might be a fixer in this sense. Yes, so Rob, I'm actually going to turn to you on the seller requiring the buyer to use their title agent and let you have some commentary and perspective on that.
So in the title world, from my perspective, I'll give you a quick little rundown of title. I'm more comfortable with the bigger companies in terms of neutrality and fairness. They're doing thousands of transactions. They're nationwide. You're not getting that title company to do any specific favors if a lawyer calls. The smaller title company, if I'm a buyer, on an apartment, I would have an easier time saying yes to a title, to using the seller's title, because there's not that many things other than on the unit in terms of liens. Again, I'm not worried about all the relationship to the city and all the different departments. But on a townhouse, I have a relationship with 2 or 3 title lawyers where I can glean information. Sometimes title reports give information and the city screwed up and it's a vague description and it's not clear, or the city screwed up and we have to interpret their screw up. So there are things where I do lean on a title company attorney for help. And sometimes the bigger title companies have contacts at the city and they even say, hold on, let's call somebody. I never get that kind of service with a small title company. There's a lot of water issues or transfer tax issues when you're dealing with governments and not-for-profits, and the big firm lawyers have contacts at the Department of Finance. They get on the phone with me on the phone and get a guy at the city and say, this is what, this is the facts. What do you think? Are we paying commercial rate, residential rate? Are we grossed up? Are we this? Are we that? Whatever the question may be. So the bigger title companies are a little bit, have more contacts and are more resourceful. But the quick answer is, if the seller is going to use one of those bigger title companies, and there was good reason to use it, that was an advantage to me. They have the report already, they have a survey already. My client wants to close in 2 weeks or 30 days. I'm happy to use that report. If it's an elongated closing and there's no good reason, and the seller is telling me to use this title company because they get a kickback or there's some personal gain, then I'm more apt to say no.
Well answered. Well answered. I may save this other question regarding insurmountable obstacles that come up in title reports. I think we'll come back to that because I want to continue diving into some of the townhouse specific things.
Just say non-payment of mortgage, foreclosure.
Rob's like, I got him. You're the fixer. You see them and have to fix those. Yeah. Jed, I want to come to you and ask, like, when going and handling the listing for a townhouse, it's such a different kind of listing, and that seller is a very different seller than your typical co-op and condo seller. Give us some of your thoughts on how you approach that thought process as an industry leader. You've dominated the marketplace. You're the go-to expert in townhouses. So what are some of the things going through in your mind, in the brilliant mind of Mr. Garfield, when you're approaching a seller, about how you approach that conversation and that listing?
That's sort of a broad question, but I mean, I guess the things that I think about are maybe some of the things we've touched upon, which is just a lot of it is preparation in advance and knowing what you're getting into when you're going to go through a sale process. As I said, I think we touched on issues like title. I think on just on a more personal basis, what I always say to people, which really isn't specific to townhouses, but what I always say to owners is just recognize that customers have no imagination. People just don't, and it's a really it's simple, but it's very true. And the fact that these people have lived in a house for 35 years, they've brought up their kids there, they've stopped seeing Pete Jr.'s trophies all over his room, and to them it's just become sort of part of the background. So very often I'm saying to people, look, just clean surfaces, wash your windows. I mean, but those are more generic things. I mean, I could certainly speak to you a little bit more intelligently just about pursuing business. I certainly think that for any of the agents that are listening, there's real value to specializing in something. And I think that one of the reasons why we as a 20-person firm have 41% of the townhouse market share in Manhattan and in Brooklyn Heights, and Prospect Park as well, is because of the fact that everybody in the firm specializes. And I think that being all things to all people will probably get you some business, but I think if you're looking for longevity, and whether it's selling townhouses or condominiums or, you know, whatever, hunting cabins or farms, whatever it is you're selling, I think that having a specialty and really understanding a market makes a huge impression upon an owner, and it does make a difference. So I don't know. I mean, that's something I say to all the agents in my office. It just does.
Yeah.
So I don't know. I guess that sort of kind of addresses your question, Brian.
Brian, can I ask a follow-up question of Jed with that? I mean, so I live on the Upper East Side. I live in a co-op, but I look at the townhouses on both the Upper East Side and the West Side and in Brooklyn. They have such an ambiance. They bring, from my perspective, so much more character to the neighborhoods. Do you see that? I really hope that the interest in townhouses continues, because from my perspective, it really makes up New York. It adds to the character of our neighborhoods.
I agree with that. I mean, I was born and raised here in Manhattan. I grew up in a townhouse on 91st Street. I live in a townhouse that my wife and I bought and renovated on 89th Street. I think it's a wonderful way to live. But I think as it relates to, you know, sort of townhouses and what do they do for the city, they really do have a certain ambiance, and I really do think that they are reminiscent of the past, and I think that's really what appeals to most people, is the idea of being part of living history rather than something that was built a year ago, which, by the way, you know, has its own appeal. I mean, there are customers who I've been with over the years who just, if anyone else has lived in it, they're not going near it. They're just not. And whether that's a brand newly renovated townhouse, which is something they might buy, or an apartment in, you know, one of Naftali's buildings or in one of the Extel buildings. I mean, that's a very real thing. But I do think that if one is inclined to have some market knowledge and learn about things, there's tremendous amount of history on all of the New York City brownstones and on all of the neighborhoods too. As any of the people who are listening are well aware, you know, the city developed starting down on Wall Street. So quite frankly, the older houses are downtown and the newer houses are uptown. And by newer, those are typically, you know, built in the 1880s, 1890s, whereas stuff down in the West Village is much younger than that. A lot of that stuff was built in the very early 1800s, and some of it's remnants from the late 1790s. So again, I think that there is a certain appeal, there is a certain historic appeal, and there's a certain type of buyer that's looking for those things that they're not going to find elsewhere. So yeah, I think they certainly stand out.
Yeah. Well, so we've got 6 minutes left. And the amazing thing is this has been chock full of impressive content so far in our hour. And from our prep call, there's still so, like, Richard, we're gonna have to do a Townhouses 2.0. We might need a 3.0 to just cover all the expertise I know is lurking in these brains and needs to get out to our audience here. But for the next couple minutes, what I'd love to do is go around the horn one last time. And again, I think, Jed, I'm gonna tag off something you said regarding specialization. And I think townhouses, I think from all the things we've touched on here and all the other parts of townhouses we haven't yet touched on, I think all of you would all agree that townhouses are an especially specialized part of our marketplace in New York City and require a lot of legal expertise, brokerage expertise, financing expertise, a little bit of title expertise to help handle the nuances of these transactions. And so I'm going to go around the horn and give you a chance to share like one nugget that you think is a, you know, word to the wise for these agents out here who, you know, to sort of help them anchor their brains on one aspect of townhouses, that whether they're they're coming in from the buy side, they've got a sell side, maybe it's they've got a potential, and they say, you know what, I'm calling Jed, because Jed is really the expert in it. But how should they be setting expectations with that person before they call Jed? So what is your takeaway nugget for these agents and brokers and other professionals that are in attendance today? So Marissa, ladies first, we get to start with you. We're lucky enough to start with you.
Thank you, Brian. So from a bank perspective, I think working with a team that really understands a complicated, sophisticated borrower and a complicated, sophisticated transaction, where you have someone or your client has someone to pick up the phone and call that can work with you as the broker, with your attorney, with the other side to get the deal done and keep it moving and not have it be lost in the atmosphere of the bureaucracy is crucial, and is really crucial to a townhouse. And understanding the difference between a pre-approval letter so that your client can actually go out and bid for cash versus a pre-qualification letter is also crucial on either side of the transaction for a broker to understand.
Yeah, I absolutely think so. Okay, Mr. Garfield, we're going to come back to you.
Well, I again, just as it relates to agents, I sort of feel like I touched on it. I think specialization is key, but I, again, in a sort of broader sense and not specifically to townhouses, I certainly meet a lot of agents that are not terribly well prepared or not terribly knowledgeable. And I think that we as brokers, as salespeople, are looked down upon by a lot of people for just that reason. I just think it's super important to be professional in everything you do. I don't know if you can see me on the screen. Put on a jacket and tie if you're a guy. It's a little thing, but you're earning, in a good year, you're earning 6-figure fees, 7-figure fees, and the least you can do is play that role and play the part. And for some of you, it's fake it till you make it. But I do think that's super important. I think something else my father told me when I first started out, and it served me extremely well, is don't lie to people. It's a bad thing to do. Not even necessarily for an ethical or moral reason, but I think what tends to happen is you're going to forget that you lied to someone, and it's going to come back to bite you in the butt, and those people are never going to do business with you again. And the last thing I would say is just, treat each other as brokers with respect. Try and get back to people in a timely fashion, whether they're colleagues or competitors. And I don't know, I guess that's it. Those are my brilliant nuggets of wisdom.
That's some brilliant nuggets, including multi-generational knowledge and wisdom. So that's great. Well, Mr. Frankel, we leave it to you to round us out with sage advice and wisdom for these agents as they, look at the townhouse marketplace.
All righty. Everyone here talked for an hour, and obviously there's a complicated transaction in front of you. So the team of experts that you do accrue and amass in this transaction is key. An agreement on price is not going to necessarily be a contract in hand in a townhouse transaction. So this is a longer, more stressful and strenuous negotiation. So what I would implore brokers to have, once we do agree on price, and you get a great lawyer on it, you get a great high-end banker on it, is to have patience and poise and become problem solvers and fixers, because there will be issues that come up in the contract. There will be issues that come up in title. There are issues that come up in these contracts. When I get an apartment at 11 o'clock or even 1, 2 o'clock in a day, and the broker says to me, you know, there's a higher offer, the contract and the check is sitting on the guy's desk, on the seller's attorney's desk. Could you think you can negotiate this contract and get it signed today? Well, that happens 2 or 3 times a year, and I can do that. I have to give up my day. I have to grab my associate sometimes and have her give up 2 or 3 hours. So for a deal that it's worthwhile to do, a good broker, a high-end deal, I can do it. In a townhouse, you can't do that. There's too much due diligence that goes on. So my advice to the broker set, whether you have knowledge in townhouses or not, it's great. Maybe you don't have knowledge, but one comes on your feet and you have one. You got to get a great lawyer and a great team banker. And I mean, it's even better if there's no financing, but if there is financing, you need a high-end banker like Marissa, who has access to an underwriter and who has access to get a bank attorney on the phone, because you're basically not going to get a contingency in these things. And you have to sign a binding contract and give on a $10 million deal, give $1 million that you're going to get that loan funded. So poise, patience, truth. There are negatives that are going to come up. So, you know, do you negotiate with the other side using leverage that they don't know? No, everyone knows the issues at hand. You negotiate a fair settlement. Both people have a little pain, and you get a transaction done.
Okay.
So good luck.
Wonderful. Thank you all so much for being here. You know, Marissa, Rob, Jed, can't thank you enough for all this advice. I really, as I look at all my notes, there is so much more to cover in the townhouse market. I mean, like, we really scratched the surface in the level of complexity. We didn't touch on many of the topics, but I'm very excited. And hopefully you three would be willing to come back here with Richard and I for another session or two, so we can really get into even more of the meat and potatoes of it. But again, thank you everyone for being here in attendance. Have a great day, and best wishes and happy Veterans Day to all, and best wishes for a very successful closeout to the year. Let's hope we show some really positive revenue numbers and growth in the new market year for Richard. Take care, everyone. Have a great day.
Thank you.
Thank you,
Thank
Richard.
you.
Thank you, Brian.